Today's market call is presented by FactSet, financial data and analytics powered by tomorrow.
Do you see the things?
We're doing a show.
The bars move.
It's 2 p.m. on the East Coast, not 11, but it's 11 a.m. on the West Coast.
Correct.
For anybody playing our home game. And the reason why we're doing it a little later today is because you and I were just at the iConnections conference at a place called the Glass House.
NYC Global Alt. You moderated a panel on geopolitics.
Sure.
I moderated a panel on defense tech and VC investing in it. It was actually fascinating. Josh Wolf of Lux Capital, he invested in Anduril. Okay, this is like the premier, Palmer Luckey. He's the guy who started Oculus that Facebook bought for $2 billion.
Love Oculus.
Zuckerberg fired him. This is amazing. Fired him because he was MAGA. This goes all the way back. Now Zuckerberg's gone full MAGA, which is amazing. And now Anduril is a $30 billion private company. They make killer drones and all this sort of stuff. Pretty interesting stuff. Josh invested on the seed round.
Wow.
Seed round.
So it's probably like, what, $20 million valuation at the time?
Yeah, it was nothing, I think. It's crazy.
Well, I mean, muzzle tough is what my people
one thing
say.
that's really interesting, and this came out of this conversation, and I think folks who are listening to this, we have stocks, or we have companies in the private markets in sizes that have never, ever come public in the U.S. markets or in any market for that matter. Because Anduril, if it comes, let's say it IPOs in 2 years, it's going to be a $75 billion valuation. OpenAI is $300 billion. I guess Uber was up there.
Big,
maybe. But
I mean, to your point, the companies that are trading in the private world, and you do a podcast around that.
Correct.
They dwarf in comparison companies just even 5 or 6 years ago in terms of this.
No.
And for some companies, it's probably in their best interest to stay private for a prolonged period of time.
Well, if you can access the capital, right? And so, this is like, private credit. Obviously, that's going largely to kind of supposedly companies that don't look like VC backed, that sort of thing. Companies that, need to borrow and they're paying, higher rates than they would in the traditional banking system. But that has changed a lot, actually. And I think that some of these folks who are waiting for IPOs, this Chime is coming. This is a fintech company. And, there was an article in Information yesterday said, there's going to be huge winners and huge losers, right? So the seed A, B, C rounds, great. If you invested in the F or, EF in 2020 or 2021, you're going to be down on the IPO. So they're basically talking about public down rounds predominantly for companies who raised in 2020 and 2021.
You know who's winning right now? The S&P 500. So it's like,
you're moving on.
We don't have to move on.
A whisker to its prior all-time high.
So the all-time high, 61.38 or something. I'm making that up, but I think I'm right. And then we obviously had cascaded low. We've recouped the entire thing. Carter Worth talked about this yesterday. I mean, the speed with which we've done this is eye-opening in a word. The fact that we traded back to the 200-day moving average on that small pullback and bounced is meaningful. I think a lot of people say when you see moves like this, to the extent you have seen them historically, they typically follow through. There are a lot of people that believe that. Here we are sort of as we approach, believe it or not, the middle of June, and they're going to start being people that are behind the 8 ball in the back half of this year. So the chase at some point will be on. Now I want to be clear. In terms of the fundamentals and the valuations that have been concerning, nothing has changed. Some of the valuations have actually gotten worse. But, right now, the market is trading on every piece of negative news it seems to discount. For example, when President Trump tweets out last week that President Xi is a friend, I like him, I always like him, but he's very difficult to negotiate with. That should have been a market-moving tweet. It was not.
Yeah.
And now here we are with the S&P 500, again, to your point, within 100 handles or so of that level. This trade deal or meetings are seemingly going well. I'm using air quotes.
Yeah.
It's hard to come up with a scenario that sort of derails this, but that's typically the case.
Yeah. Treasury Secretary Bessent is supposedly coming back to the States. He's got to testify somewhere tomorrow. Listen, the Chinese right now appear to have a lot of leverage. On April 1st of this year, they were exporting rare earth materials that go into our defense apparatus. They go into tech, they go into autos, a lot of stuff like that. April 2nd, they're not exporting them anymore. This is a huge point of contention. They basically are in control, at least the supply chain, of 90% of the rare earth materials that are used here in the US. You'd think that this is a major point of contention. You would think that this is something that obviously we need turned back on. So the question is, who has the leverage, right? And so if we walk away from these talks, let's say behind the curtain, there's not a whole heck of a lot going on, and they're basically not easing these export restrictions that they put on, then they clearly have the leverage, right? And so the longer that they kind of stretch it out, the more they know they imperil our auto industry, our defense industry, and the like. So this is going to be easy to or interesting to play out. So because we put the reciprocal tariffs on them, they pulled back the exports. And so this is going to take, in my opinion, I'm not a trade expert, it's going to take a lot longer than people think.
I agree with that. Historically, trade deals take a long months, if not longer, to hash out. Now, I'll say this as well. When I say what you just said, people get very upset when I say something like, we don't have as many cards as we like to think that we do, because somehow that makes me un-American. I don't think that's the case. You know, quite frankly, I think try to tell the truth and to look at things realistically is about as American as you can get. But you know, when we hear that we have all the cards, we have a lot of cards, but we don't have all of the cards. And by the way, you know, when you have that little kerfuffle that we had last week, I mean, that doesn't help. Now, it might not hurt as much as I thought it would, but it clearly doesn't help if you're an adversary or trade partner sort of watching from the wings, and you made that point as well. It doesn't really incentivize you to maybe be quick to do a deal.
Musk, Trump.
Yeah, that's a kerfuffle.
Yeah. I mean,
KER.
But like, I think there continues to be things that if you are allies, Canada, Mexico, and the EU, and you really haven't meaningfully come to the table because you're not exactly sure what we want, you still have very restrictive tariffs on things like steel and auto, you know, like some of those sorts of things. And then you see the president of the United States doing something that has basically never been done before, deploying Marines to one of our largest cities, and obviously, you know, there's like, you know, Waymo's on fire and this and that, whatever. You're saying these guys are eating themselves from within. So why not just sit back? And that's the thing that I find very distressing, and has nothing to do about the markets. You know what I mean? Like, that has to do in the core. Listen, the markets take care of themselves. They're doing it right now. You know what I'm saying? Independent of that. But if you think about what is one of the biggest movers, well, look at that. The V that we have, the left side of the V, that happened because of policy that we put in place. Is that fair?
A number of different things, but yes, policy being one of them, clearly. Obviously, that led to the move in dollar yen. I mean, that led to a lot of things that took us down in August of last year, and then subsequently this move in April. That all that trade stuff and the language around it obviously disrupted the market. So, yeah, I would say that's true. Now, again, it's not politics, but to your point, when people see whether it's called fighting within or some of the things that historically haven't happened, again, just looking it through a market lens, you wonder if people are going to be quick to come to the table, which leads us to the next chart. And it's the bond market, which, in my opinion, continues to be a concern. And we had a conversation at the conference we were just at about this move in yields since the Fed cut rates. You go back to September, I mean, yields were 3.6% when they cut, and we've never really even sniffed that level outside of that move in April in terms of the flight to quality. And here we are. I still think it's problematic. People somehow think that a Fed rate cut is going to magically fix this. I think it'll only make it worse. So we talk about it every day. We talk about it because I still think it's very topical.
I mean, just to take a step back, 3.6%. Think about that, okay? And at the time, folks were worried about a weakening economy and unemployment going higher, and that's supposedly why the Fed did what they did. But do you think that rate cut of 50 basis points and then two subsequent ones of 25 basis points, what did they do for the economy? They didn't do a whole heck of a lot. So if you're waiting for the Fed and now you have to wait probably until September for a 25 basis point cut, if that's one of the things that's supportive of your equity sort of outlook, your bullish outlook, because you think it's going to be supportive of valuations, think again, because 3.6 went to 4.7 in a matter of months. And here we are stuck at about 440, 460. That's kind of the market. And again, maybe it's not that troubling, because if you go back and you look a year ago, last summer, here we were about what, 4.25 or something like that.
We've been here before. Carter makes that point as well. And I admire his work, and I'm a fan of his work, clearly. But in terms of the yield story, I sort of have a different view. Now, I'll say this as well. We had Steve Eisman on Fast Money a week and a half or so ago, and he was not concerned at all about any of this, about the bond market, about debt levels, about any of the things that we sort of get our hair on fire about. His main concern, his only concern, is around tariffs. And he made a similar point that you're making. He didn't think it was going to be as easy a road to navigate as the market seems to think.
Well, the World Bank, and I don't know if Jacob or Steve have the
World Bank.
And listen, I have no idea what their forecasting track record is.
Remember Godfather 3? I rarely mention that, but they talk about the World Bank and all that shit.
Oh, that was
Terrible
the worst
movie.
plot.
It was awful.
Yeah. But like, as soon as I want it back.
It's awful. I mean, Pacino, I don't know what he did. He started to yell after Heat, even in Heat.
Hooah!
He just
a little overacting in Heat. That was probably what, 92, 93, and then Son of a Woman. Bill and I were just talking about.
Bill was talking about Bill's back.
Yeah, Bill's back.
By the way, Amanda's great. In case somebody's worried.
She is doing great. I actually texted with her yesterday.
Yeah.
Baby Lola's doing just great. Baby Cece, she said, is
I got a video.
Oh, I didn't get it
from Cece.
Oh, you did?
Yeah,
that's sweet.
Well, we sent her a gift, and
you know what we sent them? Second Avenue Deli.
Of course.
Amanda loves a good pastrami on rye, and that's what we sent them.
Well, now she can eat it now that she's not pregnant.
True that.
Knish was I'm sorry.
No.
Bill knows this.
It was
Bill
on
was
the
Knish
White
was
Shadow.
No.
It was Welcome Back, Carter.
No. Knish was in what movie? Rounders.
Oh, yeah.
John Turturro was, right? Remember that?
Yeah.
All right, please. Great movie, by the way.
So
Matt Damon's a fan of this show.
You and I continue to think that yields stuck here at 4.5. The Dixie, the U.S. dollar index, right where it was in the throes of that kind of equity sell-off.
Nope, there's no meaningful bounce. And dollar has bounced, not in a meaningful way. I think that's worth watching as well. And I think this potential decoupling, which was a story a month ago, decoupling meaning dollar lower, rates higher, I think it's going to start to reappear. And I don't, again, it's not market. Look at that, Dan. I mean, you see the bounce. That's the dollar. You see the bounce. We're right back to where we were, and we're at pretty critical support levels here.
Yeah, so it broke down that support, and doesn't look particularly. We've heard some folks say, "Oh, we think the dollar rally, is going to happen, and we think that yields are going lower."
We'll see.
We will see. I want to just talk about what Rosie had. This is David.
That's David Rosenberg.
Yeah, it is David Rosenberg. So this is interesting to me, and I didn't even know this sector existed. And I showed it to Danny Moses earlier today.
Danny's in the office, by the way.
Yeah,
he might be listening right now.
He has a great pod dropping with Dave DeBuscher.
No. I don't think it's Dave.
What is
Dave?
Dennis DeBuscher.
Dave was the father.
Correct.
Dave DeBuscher
played for the Knicks.
Dave DeBuscher was drafted in 2 professional sports.
Okay.
A lot of people don't know this.
No, I didn't know it.
And he played for the Detroit Pistons. The Knicks traded for Dave DeBuscher. You don't care about any of this.
No.
I believe it was 1967 or 68. I think they traded Nate Bowman to the Pistons. Nate Bowman was a player. You can look it up, by the way.
Sure.
What? Bill, go ahead. Say it. Dave DeBuscher was a critical piece of that Knick puzzle.
Yeah.
And that 69 team.
Yeah.
I mean, that's a great team.
Yeah.
Willis Reed, Hall of Fame.
You were 6 years old.
Bill Bradley, Hall of Fame. Dave DeBuscher, Hall of Fame.
Yeah.
Walt Frazier, Hall of Fame. Those are 4 guys on that team.
Hall of
and
Famers.
Then, of course, Dave Barnett was the other guard on that
Correct.
team.
So Dennis DeBuscher was on the On the Tape podcast.
Oh, that's how we got
Danny Moses. Drops tomorrow morning. 22V is his company. He's a really, really smart guy. So check that out. Follow the On the Tape podcast in the podcast store. All right, Guy, I want to do a couple things here. So let's go.
Rosie.
Let's go back to Rosie. So I didn't even know that this subsector existed of the S&P 500, but he highlights the fact that the asset management group is this the wrong one? No, within the S&P 500 has not kept pace with the S&P 500. And the names, if you want to flash forward here a little bit, it's all of the KKR, the
Okay.
Apollo, and all that sort of stuff. What does that say to you that this has not kept pace? Because you could just pull up Apollo or Blackstone, BX,
Yeah.
and you'll see that these things are way off the recent
All right.
high.
So what it says to me, and I want to be crystal clear, I'm not bullish.
Yeah.
But what it says to me is these places are behind the eight ball. One of the things I said earlier in the show, and as the year progresses, institutions like this and people that have underperformed, they're going to have to start to, they're going to have to start to get involved, whether they like it or not. We talk about it all the time. When you're losing this game and when you're benchmarked to a certain thing, you can be within a point or two, but if you're a standard deviation or two away, that's when you get, then you got to chase.
Yeah. What's interesting though to me is that these stocks of these companies, a big growth sort of engine for them has been private credit. And I think every week we've talked about this. It's the Wall Street Journal, it's Bloomberg, it's the FT, it's CNBC.com. They have an article about the risks and credit, private credit. So these guys are all in on that. Let's go to BX, just to give you and then KKR, just to kind of show you the underperformance of these stocks. It's pretty remarkable. We've also been talking about the KRE, which is the regional banking index, that has not kept pace. But on the flip side of that guy, we made a little graphic here. So just kind of scanning my heat map a little bit, and there appears to be a slight broadening to the rally. And I don't mean these are all generally things that have been beat up, but look at the autos. This is just today, okay? But the thing that's stark to me is that year to date. So you see a lot of these things other than the Exxon and Ford, obviously. I don't know why Ford's up in the air, but GM and Ford having a day, FedEx and UPS having a day, Toll and Lennar having a day, and then Exxon and Schlumberger, I just put that in there, but the XLE trades pretty well.
Yeah,
too.
well, look, I think we've done it. First of all, Ford is a disaster. I mean, Ford's up for the year. I mean, it's the same price it was literally 40 years ago. We talked about that on Fast Money last night. It's gone up and down, but if you bought Ford 40 years ago and if you went away and you came back today, you'd be like, you got to be effing kidding me, number one. Number two, GM, we've actually done a decent job. Every time it's gotten down to about 43.5, 44, whether this show or Fast Money, we've said this stock will get to a level where it's going to find support and the administration or somebody's going to say something. It's going to be sort of U.S. automaker friendly and it's going to bounce. And to a certain extent, we're seeing that. Now, it'll also overshoot to the upside and you got to pull the ripcord because they will play that game. But GM is a name sort of 44 to 53, you play that range and you continue to do so.
Yeah, I think from a trading perspective, even the Ford looks okay. If you think that there's going to be a headline, maybe you have this thing rally. I don't know. What's the level, guy? Maybe it gets to 11.5, 12. I mean, that's not much of a trade.
Look, that's a decent trade. But again,
well, look at it. The first time it's above its 200-day moving average since basically last, summer, about a year ago or whatever. Not that that's so important, but if you're going to have a broadening out, if you're going to have some carve outs, if you're going to bring back those, steel tariffs, that sort of thing, if you get a rare earth, deal, then this stock should rally. I mean, maybe it goes to $12, but that's not so exciting in my opinion. There's probably better stories. Here's a good story. And this is one that I think you've been on. This would be the Disney.
Tell me a story, Jack. Anybody know what that's from? Bill? Know what it's from?
Tell me a story, Jack.
Tell me a story, Jack. Danny, you know what that's from?
He's not here anymore.
Oh, he left?
He left you.
That's 48 hours.
Oh, yeah. So,
and then Jack says, fuck you. And then Eddie Murphy says, that's my favorite. Remember that?
Yeah, that's my favorite story.
Bill, remember that? No.
So
because his name is Jack Cates.
Yeah, Cates.
Yeah.
He talks like this. Our main man, Doug Cass, said DeBuscher drafted obviously basketball, also baseball. Yeah, you didn't say it.
I said baseball.
Oh, okay. Do you know what team he was drafted by?
Maybe the White Sox.
I'm not sure. Okay, so let's talk about Disney here. So you and I were both skeptical into the print, you know what I mean, that they were going to be able to kind of beat and raise and look where that gap to. It gapped right above that 200-day moving average. And I think that's when you said it probably makes a run towards that prior 52-week high. But here's a breakout right here, and so I guess if they put a 5-year up here, this is a static chart, guy.
That's a great T-shirt, by the way,
This
for
is a
you
static
folks
chart.
playing our T-shirt. This is a more
Playing our
dynamic
T-shirt
chart.
game.
All right, so there's your resistance level, and that's been since 2024. If you even want to extend it out, I mean, you can see what I'm looking at. That goes. You want to go back to 2023? I mean, you see every time we've gotten to these levels, we have failed. Maybe different this time. And the same way I say the more something tests the downside, the more apt it is to break through on the downside. Same thing to the upside. And what we recently said about Bob Iger, like now his reputation, his legacy is at stake. So he better pull some rabbits out of the proverbial hat in terms of this stock price. And it seems as though it's coming to fruition. This is one of these names. I think it made a 52-week high today, 120 and change. I think you buy it on strength. So if you're long this stock, close above 120, buy it again. And I think you're looking for potentially this thing to get into the low 130s. I don't think it's that unreasonable to think it can happen.
You and I have slightly different styles here because we're in a market that I think is kind of close to topping out a little bit. And so the idea for me of buying breakouts is not particularly interesting, but I, generally, as Carter would say, it's probably stylistically like the right thing to do. You're playing momentum. And sometimes, listen, I make this mistake all the time. I mean, you got to get tripped up with what you think your worldview is, and rather than just kind of looking at an individual name and thinking about the reasons why, it might continue a runaway breakout, but who knows? Let's talk semis here for a second, because we talked about them yesterday. Taiwan Semi came out with their numbers. April was up 48% year over year. They're talking about strong AI demand. They've been doing that fairly consistently each month that they release sales. The thing has the same gap as the S&P 500. Right. You see that
it's
there.
The same chart.
Right. We showed you yesterday in the SOXX, that downtrend that it had just broken out above. We like the SOX more than the SMH because the SMH is really heavily levered to TSM and NVIDIA. But, guy, this is one where it feels like it's getting long in the tooth. And I wonder if some of these strong sales that they're seeing in April or that they saw
tariff stuff.
Yeah. I mean, like, come on.
So look, this is also looks, as you just said, it's the S&P chart. It's the NVIDIA chart. Choose your chart. It looks very similar. Yesterday, we did a whole thing with Carter on how so many of the charts look like this. And then there are other charts that have completely underperformed. But I'm with you. I mean, as quickly as we sold off, and that sell-off was dramatic. I think, if I'm not mistaken, I think the stock went from 225 down to 135 or something like that. This is $1 trillion company, basically.
Yeah.
So that's not insignificant. We've gotten it all back. Again, it probably looks like Broadcom too, which is right at the similar levels. I'm with you, though. If you've enjoyed this move, you're going to get a gap fill at some point for some reasons that are not clear to me now, but you're definitely going to get that gap fill that we saw. And there are two of them in this chart on the downside.
Yeah. I mean, pull up AVGO for a second because they reported last week. And, our view, quite simply was I don't know how you continue to buy this stock, as that breakout just happened there. And, you think about that move from 150. Where did it get up to, Guy? I mean, it was kind of where
got up to 265,
265. Yeah. Heck of a rally. And, that's one where, on valuation was starting to get a little bit heavy. And the fact that investors were willing to kind of pull the ripcord after the result. I mean, this thing feels to me like you're on your way, I don't know, down another $20 or something.
You're on your way to the 200-day moving average. There's a gap there's a gap in this chart as well. I think if you look at Broadcom, it's probably a week and a half ahead of what Taiwan Semi is going to do. And you're like, what the hell do you mean by that? Well, Taiwan Semi is still in sort of the ascension phase, but it's going to get into the exhaustion phase, just like I think Broadcom is right now. So I think you're going to get a gap fill. I think we talked about it in the earnings. We said it's going to be very hard for them to say something that's market friendly. That proved to be correct. And here we are now. I think lower in both.
All right. Carter just put a note out. Hopefully Jacob has it here. He's saying to fade the semiconductors. And I just want to there you go. This is kind of an interesting sort of data here. So the Philadelphia Semiconductor Index, that's the SOX, is up 55% off the April 7th low. The S&P 500 technology sector is up basically 40%. The Mag 7's up 37.5%. This is interesting though. All the way down at the bottom, the S&P 500 index is up 25%. So the SOX has doubled that of the S&P 500 off of the bottom, and he just kind of put some lines in here. These were some of the lines we were looking at yesterday here. There's the one with no lines, no annotations,
no judgments.
No judgments.
I love that.
Yeah.
And when he says that, I just smile.
I know you do. All right, so let's put in some lines. They're my lines. You know what I mean? They're not my lines.
They draw themselves.
You can see them to the eye. And then if you look at this last one, you see these resistance levels, and you see that gap all the way down there at what, 4,500-ish or something like that. So I'm with Carter here. Maybe you start to see some kind of folks or some analysts come out and say, yeah, we think this was, a lot of double ordering in front of tariffs.
I think that is going to prove to be the case. And as the June turns into July and August, I think we're going to be reading more and more about the pull forward effect, specifically here on the back of a number of different things, not least of which is concern around tariffs and what it all means. We have a question from Lee J. I love this question. If you can put it up, because I'll read it. You cats ever, I like when people say cats, ever trade UVXY when the VIX gets really low? The short answer is probably no. Is this one of these levered things, I think, if I'm not mistaken, right? And those things, they are weapons of mass destruction. I think it's the ultra short-term VIX ETF, if I'm not mistaken.
Yep. That's just a tough one. If you own these things and they don't move, which is not moving right now, they just start decaying, because every day these are basically futures are a big component of this, and they keep rolling them one way or another. So this is just going to eat up.
I don't know if Jacob can pull up a longer term chart, Stephen, if he's
when you see not
playing a lacrosse.
Yeah, that's the point.
Yeah, that's the point. Like, I don't think people realize like that. I mean, that, you know what that looks like? It looks like Nazare. Have you ever been to Nazare?
No.
Bill, have you been to Nazare?
I don't even know what that is.
You don't know what that is?
Nazare? What is it?
Bill? Oh, my God. So in Portugal, at a certain time of year, the largest waves on the planet form. And the greatest big wave surfers in the world all find their way to Nazare in Portugal. And they've been waves measured 100 feet in height that people have surfed. Nazare. So that looks like a wave formation of Nazare. Show of hands. Anybody been to Nazare? I don't know if Jacob can pull up a picture.
Been?
No.
Oh, so you just know
I've seen video. I read.
So I don't
go to the Perplexity. I actually read like encyclopedias. Like, I'll go home and open an encyclopedia.
So I was
that sort of weird?
I was just reading an article.
Pull up a picture, Jacob.
It was I think it was in Axios, and it was about the trade war and stuff. And I saw a word that I've never seen before in my entire life.
Please tell me.
HEWING.
Hewing.
Yeah. Do you know what that is?
I do not.
I have no idea. I've never seen it before in my life.
I don't know
the hewing. Hew something,
I don't know what he does.
So to hew something, you're taking an axe and you're chopping. So that's a hew. And then if you're inging it, it means like you're probably continuing to hew. You know what I mean? You're hewing.
To strike or chop with an axe or a cutting tool.
Never heard that. Never heard that. And I said, here's a word I've never heard in the English language.
Look at that.
Look at that.
That's, I mean, seriously, look at that.
Yeah.
See that on the right of the screen? That's a person surfing. Call that person 6 feet tall.
It looks dangerous.
Is that insane?
Yeah.
Bill.
Nazare.
It's insane. Nazare.
Yeah.
No joke.
Yeah.
Okay. Nobody.
Is that all the way? Oh, no. That's
south.
Spain down there. Yeah.
It's fantastic. Thank you, Jacob.
So Carter's saying to fade the
I agree with
fade the socks. I wanted to pull this up because this hit me out of nowhere. Look at this AT&T. This thing, and if you pull it out 5 years, it comes out just T.
Yeah,
letter T. Look at this thing. It was trading at $18 a year ago. It's $28 now. If you look at it in 5 year, it looks like one of these stocks that just caught an AI bid or something like that. The yield as the stock goes higher, it goes lower, but it's still like basically a 4% yield. Pull up Verizon for a second. This one lags. I feel like Verizon is always traded at a premium to that of AT&T. But this one's kind of interesting also. They have like similar formations, but this was like, look at the other one was, lower right to lower left, upper right. This one's upper left to lower right ish.
Not that I'm in the pair trade.
Yeah.
When I was, can I tell a story? Or
sure.
We're running out of time?
We got the time. No.
Or no?
No, we got it.
I was in the equity division of Goldman Sachs.
Yeah.
It's probably 2000.
This is after you were in the commodity division. That would be the J. Aaron Group.
J. Aaron Group.
Yeah, that's correct.
And Lloyd Blankfein came to the equity desk, and he was talking to Eric Mindich.
Yeah,
you know,
when started. What was the name of the hedge fund? The largest hedge fund launch in the mid 2000s.
Something Lane, I think.
Yeah,
I don't know. You can look it up.
Like he didn't do particularly well.
Mindich was, I think, at the time, he was the youngest partner in the history of Goldman Sachs. From Scarsdale, grew up with Tim Seymour.
Yeah.
Anyhow, he was asking Eric what positions he had on, and he starts to rattle all this stuff. We're long this, short that, long this, short that. And Lloyd, who's a genius, said to him, "How do you know what you're rooting for?"
Right. With the pair straight.
Which exactly,
Yeah.
which I'm like, the light bulb went off. Like, you know what? He's right. How the F do you know what you're rooting for? So these pair trades, to his point,
but
they don't work.
There's two ways to think about that. Back then they might not have worked, but you know, a lot of these, what they call pod shops, Citadel, these sorts of things, they run very low nets. They have their PMs do exactly that. They have them basically pair. And you know, like some of these places have great returns. They also have netting risk at the top of the fund, that sort of thing. So they like the idea that they paired them up a little bit. Eaton Park was the name.
I said Lane Park. So
similar enough.
Anyway, who was in your ear? No, but you just looked it up.
Yeah.
I bring that up because T-Mobile, which was a $276 all-time high stock in February, it has sold off in the same type of way that AT&T has rallied. So you're going to get to a point where you get right back into T-Mobile.
All right, here's a question. By
the way, it's
from
close.
Dan N. It goes.
Is he watching right now?
Yes. And do you buy stocks like telcos for a dividend yield? You just said you just said AT&T was 3.9%. Verizon is 6.14%. So it's a smart question from Dan N. Probably one of the smartest questions we've gotten, probably from one of the sharpest guys.
Yeah, sharpest knife in the draw.
All right, go ahead.
The short answer is no. To me, a dividend is sort of the cherry on top. So if you're buying things for the dividend, in today's world, the dividend of a 6% dividend can go away in a day in terms of the underlying stock move. So no is the short answer. I think if you buy a stock because you think it's going higher, and oh, by the way, there's a dividend associated with it, good on you, as they say. But do not trade stocks, in my opinion, for dividends.
Yeah, one thing, though, is probably not a bad idea. Let's say you own Verizon. Let's say on a quarterly basis, you're getting 1.5%. You know, like you could look out, let's say right now to September expiration. Maybe you want to sell, let's just say the 47 call at about 80 cents
Get
or
a
something
little
like
synthetic
that.
dividend
Yeah,
on top
so
of
that
the
would be like
dividend.
1.5%. You keep rolling that. But, you know, who knows? I mean, these stocks, it's not likely to break out in a meaningful way. And maybe you just own it because you think something fundamental over long term. I don't know. I mean, right now, though, these are like bonds. So, like, there's really, you know, you just much to,
I think Carter said that yesterday on CNBC's Fast Money about
what stock?
Ford.
Hey, all right. So pull up Intel for a second here.
Comes out INTC.
So the stock guy, the 80 has been a level over the last year or so.
20.
Let's go a 1 year or 20.
Not 80.
20. It's up 8%
80,
today.
20.
What do you think's going on there?
I think it's the broader semi trade, the acceleration of the upside. I think it's getting dragged up on the back of that. I don't have any news in front of me, so maybe there is news generated. But the same way that good companies get dragged down, and we're going to talk about Novo Nordisk in a second. When the ETF is getting sold, or when one of the biggest stocks in the ETF is getting sold, you have collateral damage. I think it's the same way. You're getting the opposite of collateral damage here with Intel as the semis sort of rally.
Yeah. So you remember when a new CEO was announced, and I'm going to say I'm going back. It was in March.
Yeah,
okay.
I was say 3
and
or
you
4
see
months
that
ago.
there was a gap there. And, you know, when he was asked the question, he basically said he's not changing much of the strategy. Is that what he said?
Which is disappointing.
And then look what the stock did. It kind of filled in that gap and kept on going lower into the April lows. And, you know, you look at this company, they have not been competitive on a whole host of different sort of chips, especially as it relates to generative AI. Apple yesterday at their WWDC, they announced a new operating system for their Macs. This is going to be the first Mac in a very long time that is not using an Intel chip. So they basically been designing their own chips. So you'd say, okay, that's not particularly great. So maybe this company and maybe this new CEO just says, hey, listen, we're out of the chip designing game. We're going to be in the chip manufacturing game. What was it that you were calling this? What play? You were calling it when they were getting money from the CHIPS
Homeland
Act?
Security play.
Yeah, you were saying it's a national security play. So that could make a lot of sense. And especially if they were to partner, let's say, with TSMC or something like that and start building fabs here in the US, you know, look at the valuation that TSMC has. And if you also think about diversifying supply chains, you know what I mean? Like that's the big point that you're saying national security, but get TMC manufacturing away from Taiwan.
It makes sense. You know, Intel for years was the top of the pile.
Yep.
And AMD existed for the sole reason, in my opinion, so Intel wouldn't be a monopoly. And then Intel got lazy. And guess what happened? AMD started to figure it out. And then they obviously exchanged places. So complacency, especially in the semi space, is a really bad thing. By the way, you said Mac. Who was the quarterback in North Dallas 40? The actor.
Robert Redford. No, I'm sorry, Burt Reynolds.
No,
North
that's
Dallas
that's the longest yard.
40?
Mac Davis played the quarterback in North Dallas 40.
Oh, he was an actual player.
Mac Davis, no, he was not an actual player. If you watch the movie, you'd be like, "Are you kidding me?" Because he's like he's just a dumpy dude. He's like, "There's no way this guy's playing in the league."
Yeah.
But Mac Davis also was a singer. Baby, baby, don't get hooked on me. It's on my playlist.
Yeah.
Because I'll just use you, then I'll set you
All right,
free.
so you guys will find
great
this funny.
lyric.
So last Thursday, we had
scratching
this
his ear.
live fest money. There's 125 people who bought tickets. These are avid fans or fervent fans. So there was a bunch of questions asked. I think this one was asked on TV because you went out in the crowd while the show was running, and some guy said he looked at your Wikipedia page and you had a 105-yard interception in high school. Talk about glory days. So you just you were a linebacker back then?
I was a safety.
Really?
They told me beginning of the season.
Yeah.
You just
senior year?
Senior year. You just sort of prowl out there. And they sort of let me do my thing, which is pretty cool. So sometimes I'd line up on the line of scrimmage. Like I was all over the place. I'm 18 years old.
Yeah.
Maybe I wasn't even 18 yet. I was probably 17.
Turning 18 was your birthday.
Yeah, sure.
So right after the season.
So I tried to get inside the head of the offensive coordinator, the head coach, and try to sort of read things. And that's what I did.
Did you write your own Wikipedia page?
I did not.
Where'd they get that information?
There's a lot of things on that. They have where I was born. They have my parents' names.
By the way, Bill,
they have like a lot of your high school stats.
Do they?
You don't know Guy well enough to think that he actually.
I would. First of all, how would I be able to do that?
That's amazing.
Anyway, so yeah, I was 104. It was against Hastings. At Hastings
on the Hudson.
Sure.
And you were Croton on the Hudson.
Croton on the Hudson.
Yeah.
Anything, took it up the sideline. And
Guy, anything else sticking out to you? Like when I look at, like, for instance,
you brought that up. That's a long time ago, Bill.
But Jacob can confirm that was said on the broadcast.
Somebody asked me. I didn't bring it up. You say it like oh, by the way, Fast Money people, in 1981, that's not how it happened.
Okay, just saying. But you remember that was.
By the way,
do you remember the actual date?
No, it was probably
October 17th, 1981.
So here's a funny story, Bill. Football ends my senior year. We're playing basketball.
It says here you captained both of our football and basketball teams.
Yeah, that's true. Playing basketball, we go to Edgemont. Now, Edgemont had a guy who went to school with you, a guy named Bruce Lefkowitz. Do you know the name?
Yeah, he's
older than you.
15 years old.
So Bruce was 2 years behind me.
Yeah.
Bruce went to Edgemont High School. He was about 6'8", 6'9". I think to this day, he's the all-time leading scorer in Westchester history.
Okay.
My junior year, he lit me up like a Christmas tree. So now it's senior year. And we're going out for the handshake before the game.
Yeah.
And he said, "Hey, man, you had a great football season. Congratulations." I said, "Thanks, Bruce." He went on to put like a 40 spot up on me. It was embarrassing. Really embarrassing.
Were you gracious about it?
Was I?
Yeah.
I hated. There's something in Westchester called the Con Edison Award.
Yeah.
It's given a weekly award given to the best athlete in the county that week. My senior year, I was responsible single-handedly for 4 guys winning the Con Ed Award, not me. And Bruce was one of them.
Bruce
the week they played against me.
No,
it's a true story.
Bruce Lefkowitz.
I mean, he lit me up. I mean, it happened because I had I wound up guarding. There was a guy from Ossining named Paul Cooper. Ossining, by the way,
is Sing Sing is.
Exactly. The town used to be called Sing Sing. I don't know if Timmy's going to text in, please stop. But there was a guy named Paul Cooper, and Cooper was
Coop. They just called him Coop.
They did call him Coop. And he was lighting me up like an effing Christmas tree. And he was about to break the school record for scoring. He went up for a dunk and he missed it. I'll never forget it.
What was your nickname in high school?
Big.
Stop it.
No, if I go home, people still call me.
Yeah, but you know his family call him is Gigi.
Gigi. My family, like aunts and uncles, call me Little Guy.
Little Guy. Yeah. So Big and Little Guy. That's kind of weird.
Well, Big in town was the big guy. Like people still say the big guy.
All
Let me
right.
tell you.
All right.
Anything else sticking out to me?
No.
I don't know what else
No,
sticking out.
this
Do we
is
have, we
good.
have a Wavy McFly question.
All right, let's get that. Then we gotta get out of
Bloomberg
here.
reported that Scott Bessent is a top contender. Put it up so I can read from the screen at some point. To replace for the next Fed chair. This goes with the shadow Fed. Yes, it's true. They also made a point of saying it's not going to happen until Jerome Powell's term is over, I think in the spring of 2026. This can't instill confidence in the dollar. I agree with that. When you start talking about replacements and stuff, I agree that's one of the reasons the dollar's been weak. The dollar took a huge leg lower a month and a half or so ago when President Trump tweeted about Jerome Powell, can't wait for him to go, want to fire him and all that stuff. So, yeah, anytime you start to foray into this lane, it's not dollar friendly.
Yeah. And again, we'll just kind of end it here. Like that's one of the reasons why. I mean, we could be, I'm not a macro guy, but when I look at, one of the things that people wouldn't shut up about in early April was like, look at the precipitous drop in the dollar. Look at the opposite motion. Usually when you see weak dollar, you expect weak yields, right? In the 10-year, and they went the other way. So yields are stuck where they were back in early April. The dollar stuck where it was back in early April. It's that the stock market, as you say, guys, climbing a wall of worry.
No. Maybe please stop.
Maybe there's not much worry out there, but like it speaks to a level of complacency in the stock
and the money's
market.
on the sidelines.
The money's on the sidelines, and it's going to be hump day tomorrow.
Yeah, it is.
Wednesday.
Tomorrow, by the way, what is on Wednesdays for us?
Butters.
Bitch. Yes, it is.
Yeah.
Hopefully we have some good work from Butters. He doesn't mail it in. He never really mails it in.
No, he's the man.
I texted with Elizabeth Young Thomas yesterday just to see how she was doing.
Yeah, how she
sent me a picture of her and the baby. Adorable.
Baby is so cute.
It really, really. I'm happy.
Just said that.
Listen, I'm happy for obviously Amanda and her family. Liz, it's great. I mean,
yeah, but without naming names,
Yeah.
you and I were with a man. He must be your age, 60.
I'm 61.
He's got grown kids. Like
Mhm.
one's going to college next year, and he just told us that he has a 1-year-old.
No, I mean, he
And
was on the show last night. You can Google it and
not
figure
to
it out.
dox him, guy. Come on.
I had no idea.
I know, but like
His son's going to be in school with your daughters
I
next
know.
year.
I can't imagine being
Son's a good-looking kid.
60 years old and having a 1-year-old baby.
No.
I mean,
He's older than I am.
I know.
I think Michael's like 63.
He looks great though.
Yeah, well,
By the way, you called Jeff Hurst.
I know, I effed that up. I don't know why
Did you
I had
notice how
Schwartz.
I came?
I know you
I
did a
came
good
right
job.
in there.
I don't know why I was thinking Schwartz.
Schwartz, Hurst.
Hirsch.
It sounds like a great law firm.
It could be.
You know what I mean? Schwartz and Hirsch, attorneys at law. Why is it
when you
at
go-
law? Attorneys at law.
It's a good question. When you hear the commercials when they have a little jingle.
Yeah. We have no one babysitting us right now. We
But
could
I'm
do this
sure
for like
Timmy's
2
pissed
hours.
off.
Are you bored, Bill? Can we do it for 2 hours?
No, Bill and Joyce. Bill laughs.
This is my favorite
Bill's a
part of
comedian
the
that
show.
laughs.
Oh, so
What we got?
So Jacob just says use the Schwartz.
Schwartz.
But by the way, Jacob, I can confirm to you the Guy Adami has never, ever
Spaceballs.
Have you seen it?
Yeah, I've seen it.
Really?
Let the Schwartz be with you.
Oh, you've never seen it, and you're
No, I've
supposed to be
never
a
seen it.
comedian.
Bill is a funny guy.
All right, let's get out of here.
Tomorrow we have Butters.
You know whose podcast I'm going on?
How
in
would I
about a
know?
half an hour is Nicole.
Nicole Lappin.
Money. You've been on it
Yeah.
many times, haven't you?
I love Nicole.
Money
She does a great
Rehab.
job. So she
Yeah.
was at CNBC for a long time.
Yeah.
She worked with Kudlow. She's doing her own thing. She's got a great following. You should follow Nicole. That's going to be fun for you.
Yeah, I think I don't know when it drops, but it'll drop this week or something. So go check out Money Rehab. Excited to have that. It's actually really nice to go on other people's podcasts who have a different demeanor, like they have a whole different
And people,
mandate or whatever. You
Yeah.
know what I mean? It's kind of fun.
you're always respectful. I don't
course.
curse on other people's podcasts.
Well, you ever hear that? Like people say, "Can we curse here?"
yeah,
Like,
people
say
get a
that
kick
lot.
out of it.
Yeah.
Oh, you know who I saw? What's his name
Who?
that wants to curse all the time on our
Who?
podcast?
Who's that?
It's on the closing bell all the time. Can't think of his name. I
Oh,
hope he's not watching right now.
You saw from BMO.
Yeah.
Yeah, you saw Belsky,
No.
Brian Belsky.
No.
From BMO. Who's the other
If he's
guy?
watching, I'm
Dan Greenhouse.
Dan Green.
I saw. He is from Solus Capital.
From Solis.
I saw him for a second there
So Dan, he came up to me and said, "What are you doing here?"
at the Eye Connections.
It's the same thing you're doing here. Just trying to make.
All
Baby.
right. If any of you guys are still here,
They're still here.
We appreciate you being here. Tomorrow we got Butters.
Do you see the Florida Panthers? What they're doing? This is the NHL final.
Yeah.
This is the Stanley Cup
Yeah.
finals.
Yeah.
Two best teams theoretically in hockey. It's last time it was embarrassing.
Rangers had a hard time with them.
Everybody's
year.
having a hard
I'm
time
just
with them.
saying. Okay.
You watch that team play. Bill knows this because he's a hockey guy.
Yeah. Devils fan.
I mean, they back check physical. Look at that.
Yeah.
Skating. I mean, that's the way the game should be played. And then they fucking, pardon me,
Whoa.
are smiling after they're in fights. I mean, I love this team.
Do you know what the New Jersey Devils record was versus both teams in the Stanley Cup Finals?
4-1-1.
4-0-1.
Whoa.
Okay.
Back to you
Okay,
guys.
wait, hold on a second. What did I say? I said 4-1-1.
I just heard you say everybody's having trouble.
I said 4-1-1. And what was the record? 4-0-1. You don't give me any credit for that.
Oh,
you just glossed over.
So you think the Panthers win the series? It's 2-1 right now.
I think Connor McDavid is pissed off.
Connor McDavid,
best hockey player ever.
Yeah.
So they're going to show up.
Okay.
Because they this is it. I will tell you, if Edmonton doesn't win, and you might see this team. A lot of these teams might start to get broken. Toronto is getting broken up.
You thought they were going to make a run.
Yeah, they should have.
I know. I'm just saying.
Right, Bill?
To make a run. All right. We should get out of here. Thanks so much for being here. Thank you for entertaining our little chit chat here, but it's a lot of fun.
We got stuff done. We got work
we
done.
did. Okay. All right. Thanks everyone. See you tomorrow.